Vivek, Founder Director, Vachana Investments Private Limited. CA Navin Kariwal, Practicing Chartered Accountant. CA Deepak Kumar Jain, Founder Director, Accolet Advisors Private Limited. CA Jain Chatterjee, Head of Tax, ABB India Limited. CA Sunil Kumar Dhareshwar, EVP Finance and Global Head of Tax and Infosys Limited. Ms. Suma Reddy, Senior Vice President of FKCCI. CA Ravindra Skore, Central Tax and Corporate Laws Committee of FKCCI. CA Dr. I.S. Prasad, Past President and Advisor, Central Tax and Corporate Law Committee of FKCCI. MC members of FKCCI, the respected panelists for today's event, members from the virtual mode, distinguished members, ladies and gentlemen. It's my privilege to welcome you all to this insightful session on the analysis of Union Budget 2025-26. As we gather here today, the nation is abuzz, discussion on the key provisions of the budget, its impact on industry and trade, and the roadmap it sets for economic growth. The Union Budget is not just a financial statement, it's a vision document that reflects the government's priorities for economic and industrial development. For the business community, it brings both opportunities and challenges. Some sectors may receive the much needed boost, while others may feel overlooked. It is our duty as industry stakeholders to critically analyze its provisions and chart our course accordingly. This year budget comes as a crucial time. India is striving to solidify its position as a $5 trillion economy while navigating global uncertainties, inflationary pressures, and evolving trade dynamics. MSME, the backbone of our economy, are looking for sustained policy support, while large industry seeks an investment-friendly environment. The tax structure, infrastructure spending, digital initiatives, and sectoral incentives all play a decisive role in shaping our growth trajectory. At FKCCI, we always been at the forefront of advocating for policies that drive industrial expansion, support small businesses, and create a robust economy ecosystem. We had submitted our pre-budget recommendation, and today we shall assess how much of our expectations have been met. More importantly, we will discuss the practical implication of the budget, what it means for manufacturing, services, exports, taxation, and overall ease of doing business. To guide us through the economic perspective of the budget, in-depth analysis, we have with us the distinguished panel of domain, expert tax consultants, policy analysts, and industry veterans. Their insight will help us decode the finer details of the budget and prepare ourselves for the road ahead. I encourage everyone here to actively participate, seek answers, and share your perspectives. The success of this discussion will depend on the exchange of ideas and collective wisdom in this room. With that, let us commence this enlightening session. I once again welcome you all and look forward and engaging and thoughtful provoking discussion. Thank you.
Thank you, sir. May I now request CA Ravindra Kore, Chairman, Central Taxes and Corporate Laws Committee, to give his opening remarks.
Respected President Sri M.G. Balakrishna and office bearers, the speakers of the today's session, and all the invited guests. Madam Nirmala Sitharaman presented the budget for Modi's government 3.0 first full-time budget. The all about budget, FKCCI and in association with Accolet and IndiaGST.com, we are organizing this program to enlighten our members and all the fraternity to, even though that 1 hour 15 minutes budget is a huge task, all of us, our dignitaries today presented here. So on behalf of FKCCI, I am going to just introduce quick introduction of the speakers for the today's CA Rudramurthy, a chartered accountant, holder of 5 master degrees in finance and control. He has over 17 years of experience in stock markets, trading and investing. He will be, you can view his, always available in TV. So today he is going to take through us on the subject economic perspective of budget. I wholeheartedly welcome CA Rudramurthy onto this occasion. You thought manufacturing side, who will be the best person? Then again, our professional brother CA Jayant Chatterjee has over 25 years of professional experience as a qualified chartered accountant and with executive MBA from IIM Kolkata. Jayant is currently the head of tax ABB India, handling India and IMA region. Jayant was previous the head of tax at Sender Electric and has previously Areva T&D India Limited and Reliance Energy Limited. He has a vast experience in the manufacturing sector, so he is going to take it to us in the perspective of manufacturing sector. I wholeheartedly welcome C.A. Jayant Chatterjee to this program. We have it under service sector. From service sector, CA Sunil Kumar Dhareshwar has over 20 years of experience as a qualified chartered accountant, securing a rank. Sunil also got trained at the National Defence Academy, Pune. Sunil is currently the Executive Vice President Finance at Infosys Limited and responsible for global taxation, corporate accounting, treasury, and financial aspects of for M&A transactions. Sunil is also the global CFO for consulting BPM products and platform businesses and global head for infrastructure, facilities, and physical security. Sunil has previously worked with 21st Century Fox, formerly known as News Corporation, and is also a trustee of Infosys Foundation. He is presenting his views from the perspective of service sector. I wholeheartedly welcome CA Sunil Kumar Dhareshwar for this program. Welcome you, sir. We have with us in the direct tax perspective none other than CA Naveen Khariwal, is a practicing chartered accountant, having huge experience in the direct tax. Naveen is a partner in HC Kincha and Co. He presented papers across the country. I wholeheartedly welcome CA Naveen Khariwal for this program. On the side of indirect tax, CA Deepak Kumar Jain has over 23 years of experience on indirect taxes, including 9 years in Big Four accounting firms. Deepak is the founder of Accolet Advisors Private Limited and of the domain app IndiaGST.com and previous provides professional advisory, compliance, and litigation support service to Indian as well as multinational companies on indirect tax matters. I wholeheartedly welcome CA Deepak Kumar Jain for this program. Members, I wholeheartedly welcome you for this program because we have invited as a part of FKCCI, all the speakers are going to present their views and then question answer session will be there from moderator and then for all the members you presented, you can ask the questions. Let us seek the good discussion for this outcome of this session. Thank you one and all.
Thank you, sir. Now may I request our president and office bearers to honor our distinguished speakers. May I request our CIS Prasad and Mr. Ravindra Kore also join. Thank you, sir. Now may I request Sri Ravindra Kore, our chairman, to take over the proceeding.
Members, let us start the program with as our predetermined agenda. Now I request C.A. Rudramurthy B.V., Founder Director Vachana Investment Private Limited, to present on his views, economic perspective of the budget. Over to C.A. Rudramurthy.
Good evening, ladies and gentlemen. Good evening. Okay, so when I see the quantity of audience here, that doesn't matter to me because the quality is more important. And when I was just looking into the FKCCI material, their browser says they have an total experience and the accolades of over 100-year plus. Sir M. Vishweshwaraya is there. You have people like Abdul Kalam and many, many more people who have held the batons of that particular industry. And then when I see now on the stage, now you have 150 plus years of experience from people like Sunil. I have people like Deepak, and from ABB you have Jayant. And when I see them, right, they're all chartered accountants with experience of 25, 30 years. And how can I forget Naveen? He's a partner with Padam Kincha. And when I did my CA, I used to keep Kincha sir as my role model. So it's like Dronacharya and Ekalavya. And I had an occasion to even speak on a stage last time along with Padam Kincha. And for me today, it is one humble start to begin this entire budget 2025. But then whatever it is, once I have the mic and once I have the chance, I want to also put my foot down and just give my perspective of budget. So quickly, I'll just put the economic perspective of budget 2025. In fact, I have a time of about 15 minutes. So I will just try to complete all the economic perspectives of the current budget. And first of all, most of you will have this question, and the same question was there even on the stage. In fact, the president now of FKCCI, he was asking to Deepak, how do you rate the budget out of 10? How much do you give? So this is the first question what anyone will ask. So same question I'm asking this audience here. How many of you feel budget was great? This budget 2025. Okay, that's my next question. How many of you feel budget was bad, not great? Okay, I know some of them will not raise hands for anything. So how many of you here will not raise your hand for anything? Okay, good. Thank you so much. Thank you. Okay. Let me be very clear. It all depends upon whose perspective are you looking from, which sector are you looking, and whose angle are you looking. Because for me, if it is personal consumption, consumable, durables, or middle class, salaried class people, yes, for them it was a great budget. But the same budget, if you look from the eyes of, let us say, spending towards capex, infra, defense, PSU, it is an average budget or a general budget. So it is very difficult to answer whether budget is good or bad unless you know from whose perspective or angle are you looking from. But overall, let me just present to you from different industry sectors as well as perspective on how this budget was, and specifically from the economic side. I don't want to touch anything about taxation, either direct tax or indirect tax, because you have the next speakers, experts on that particular area who will talk upon. But let me touch on economic perspective. First of all, I don't want to give you anything which is there in internet. I just want to give my perspective and share these numbers with you. Now, first of all, the budget 2025 was a real big challenge for the Modi 3.0 government, because they have to take care of two important aspects. One, growth, and at the other side, they have to even maintain the fiscal deficit. So if you want growth, which has come down for last 4 years, if you see growth rates from 2021, which was at 8.7%, came down to 7%, then to 7.2%, and now that is for 2024 economic survey told the growth rate is 6.4. So that means we have reduced from 8.7 to 6.4, and the current budget estimate for 25-26 is 6.3 to 6.8. So that means even for the upcoming financial year, we are seeing it more or less same as 6.4% what we had now. It might go into that range of 6.3 to 6.8%. I know many comments came saying that the GDP is coming down, and numbers are definitely talking about it. But I want each one of you to also see what is happening to fiscal deficit number, because I don't want to read growth keeping aside fiscal deficit. We have to always look at growth and fiscal deficit together. And when I see fiscal deficit number, in 2021 it was at 6.7%, and this number came down to 6.4, then to 5.8, and now it is at 4.8% for 2024-25. So that means we have seen reduction in fiscal deficit, which is good. No doubt growth also has come down. But then look at even the fiscal deficit estimate for 25-26. That number is below the current number, which is at 4.8, and they have given it at 4.4. Now I want to bring this data comparison with that of America. Now we are only talking about India's slowing down in terms of growth rate. Look at what has happened to America. In 2021, America's growth rate was 5.8%. From 5.8% in 2021, now they have come down to 2.8%. Look at China. China's growth rate was 8.4% in 2021, and they have now come down to 5%. So that means if you look at 2021 to 2024, US growth rate has come down by 52%. China's growth rate has come down by 40%, whereas India's growth rate has come down only by 26.5%. In fact, someone asked me this question, why are you comparing it with US, China and all? Please accept GDP of India has come down because Rahul Gandhi has told that. So I said, India cannot be seen in isolation, because India has imports, India has exports, and we are part of the global economy. So you can't just say India's GDP has come down, not seeing what has happened in the same period in the country like US, or for that matter China. US GDP has fallen 52%, I said, and China's GDP has fallen 40%. And what is also more important is not just seeing GDP going up or coming down. What has happened to fiscal deficit in the same time? And when you see fiscal deficit in the same time, we have definitely improved far, far beyond even the expected numbers. And this tells to me that growth with control on fiscal deficit is very, very important. And more than that, look at even inflation data, look at even revenue deficit data, and also look at even the central government debt to GDP data. So when I see all these numbers, take example of revenue deficit. Again, revenue deficit has fallen from 4.3% to 1.5%, which is very good. And if you see even debt to GDP ratio, this number was 57.1, and now it has come down to 56.1, and for 2031, government aims to bring this number down to 50. And if you look at inflation, inflation in 2021 was 5.13. From there, we went up to 6.7, again came down to 5.69, and now we are at 4.9. So having growth with fiscal deficit and inflation in control is very, very important for me. And budget estimates for next year, that is 25-26, inflation to come down to 4%, which is very good. And whenever inflation comes down, what happens is we see more rate cuts. In fact, we have the RBI committee meet and the policy coming out. Yeah, tomorrow the meet starts, but the rate cut happens on 7th, Friday. People are expecting rate cut. Let us see what comes out there. But what is very crystal clear for me from all this data, whatever I have presented to you, that yes, we have better growth rate compared to US and China. And we have inclusive growth, which is very important. And more than this, we have a check on both fiscal deficit and revenue deficit. And we have inflation, which is in control. And these are things which are very, very important, and not to see GDP in isolation without seeing what has happened to fiscal deficit, revenue deficit, and inflation. And also globally, you have to make comparison of these numbers. And I always say, बेटा झूठ बोल सकता है, डेटा नहीं. Okay, so my Hindi is very bad. I am a Kannadiga, but I have to talk in English because a lot of people have only that one common language. But I always say, beta jhoot bol sakta hai, data nahi. And this data tells to you what it is. But if you simply see the GDP for last 4 years, you will say, yes, it has fallen down. But if you make a comparison and if you see even other supporting data to it, then one can come with a conclusion. Look at even Forex. The Forex reserves are healthy now at $640.3 billion. This is as on December 2024. However, if you see rupee depreciation, definitely it is a worrying factor. The average rupee value versus dollar was somewhere at around 74 for 2021. And in the same period, whatever I am comparing all the data, for 2024, the average rate of rupee versus dollar is at 83. That means you have seen a depreciation in rupee, but let us only look at last 1 year data also. So in the year 2024, rupee has depreciated again by 2.8% versus dollar. But look at other emerging market currencies like Brazil, Real, it is down 20%. When our rupee is down 2.8%, Brazil Real for the same period is down 20%. Mexican peso is down 18%. Korean won is down 12%. So if you see emerging market currencies and how they have done against dollar and compare that with rupee, you have these numbers, whatever I am giving it to you. However, in this budget, CapEx was one of the most important thing what everyone was watching closely. Because if you see last year, the CapEx investment government announced was 11.1 lakh crore. But then if you see the data till December, what is spent from that 11.1 lakh crore, still you have, if I am not wrong, close to 3 lakh crore plus still available to spend. And for the next upcoming 25-26, they have given 11.21 lakh crore of capital expenditure. And if you see here, what is very important is not just these numbers. Look at what is CapEx as a percentage of GDP. And CapEx as a percentage of GDP, it was just at 2.5% in 2021-22. But this number from 2.5% went up to 3.7, went up to 3.2 then, and now it is at 3.4. That means even compared to last year CapEx to GDP ratio, we were just at 3.2%. This year, even though the CapEx is only 11.21 crore estimate, still the number comes to 3.4% of GDP, which is higher. And what is very important is, again, this CapEx numbers we are having is keeping in mind the physical prudence what we have always maintained, and that is very, very important, because CapEx without physical prudence again makes no meaning. And most important, India's share in global exports and even in GDP has shown a consistent rise. That means India's export on total export as well as India's share in the GDP has also gone up consistently. In fact, we are the second largest exporters for telecommunication, computer, and information service. And most important, gross NPA of scheduled commercial banks have declined to the 12-year lowest level, which is at 2.6%. And this has happened because of falling slippage, higher write-offs, and even because of steady credit demand. Now, if this has been the economic scenario, I come from capital market background. In fact, while reading my bio, they said I have 17 years of experience in capital market. That is only 17 years of successful journey in capital market. Before that, it was a failure journey. But the part is market will make you failure anytime. So even future is also uncertain. In fact, I still remember one person asked me this beautiful question. Capital markets are always certain. Up, down, we don't know what will happen. I said in life, there is nothing certain except death. Why should capital market be certain? And we have opportunity because it is uncertain. If it becomes certain, then there is no opportunity. So be happy that it is uncertain. Accept the fact that it is uncertain. And also understand that opportunity lies only because it is uncertain. If it becomes certain, then there is no opportunity. And if someone here says, I'm not interested to make money, then I either say you're a liar or you're God. So let me now give you the capital market perspective from this budget. And if you see last year budget, definitely for me it was a howler. If you ask me why, they increased everything which was possible. They increased short-term capital gain, they increased long-term capital gain, they increased STT. In fact, STT was brought because earlier you had something which was not there. Now you have everything. STT still remains, and increase in everything happened last year. I'm sure you all know the numbers. Long-term capital gain 10% went to 12.5%. Short-term capital gain went up from 15 to 20%. STT also went up 0.01% to 0.2%. Now, why am I giving last year data? Because this year, whenever people asked me, what is your expectation from capital market from this budget? I used to only tell them with folded hands. Let Madam Nirmala Sitharaman not increase any tax. That is my expectation. And number two, I don't want her to bring any new tax. If she can do only these two things, the budget is great. And in fact, the number of memes and all the short videos and all the jokes coming on Nirmala Sitharaman was the highest in the world. Everyone were talking from popcorn GST to anything which is available. But then the surprise what she gave, no one even expected. And I say, you cannot reply back to all these jokes, memes better than what she did in terms of 12 lakhs. And all that my panelists will talk when it comes to direct taxes, when it comes to indirect taxes. But what I want to tell you is, look at capital market from last year to this year. This year, at least, we had no increase in any of these things. Short-term capital gain, long-term capital gain, STT, nothing happened. And most important for me, look at how the sectors and stocks did. Both yesterday I mean Saturday, and then even today. We had market working on Saturday. And if you see what happened because of some of these economic implication as well as the budget outcomes, yes, there was a big push which came for FMCG and also for consumer discretionary stock. And this happened only because the big consumption boost came in the form of 1 lakh crore money now lying with the hands of these tax filers, middle class people, salaried class people. And what happened was stocks like FMCG and consumer discretionary sector stocks like Zomato, Swiggy, Hindustan Unilever, Trent, Tata Consumer, Jubilant Food, Voltas, Blue Star, all these stocks went up. And if you see even what happened to hotel, yes, look at stocks like Indian Hotel, Lemon Tree, Chalet Hotels, all this did very, very well because more spending will happen now from people because they have more disposable income with them. And even if you see travel and tour will do good, stocks like Thomas Cook already did well. And very important is every budget you will see definitely hike in rates for tobacco products or alcohol. This time they did not even speak anything. And that was very good for stocks like ITC, Godrej Philip, VST Industry, because always any budget we always say there will be increase for excise duty or for these alcohol or these tobacco products, which never happened, which was good for these stocks which I mentioned now. And very important, look at this one self-occupied property which was exempt earlier. Now they made it into two, and this resulted in boost for stocks like Shobha Developer, Prestige, Godrej Property, and few others. No doubt people will only tell last 2 days market did not do good, so budget is not good. But what you are not understanding is market does not work only on budget. Budget is one of the factor. There is so much beyond budget. On top of Trump putting all the tariffs, still our market today was just down 80-100 points on Nifty when all other Asian markets were down 2-3%. So I don't have to talk. You can tell what the impact of the budget is on market. However, if you also see furthermore, things like launch of modified Udan scheme to connect 120 new destinations and even 4 crore passengers to travel next 10 years, this was a big boost for stocks like Indigo and even GMR Airport. Don't later ask me which stocks to buy. I've been giving so many names. Only thing is you need a copy of this. Surely I can give you. But again, at the end, I have a disclaimer written. Please contact your financial advisor before taking any decision on the same. Okay. After this, you can even see Jal Jeevan Mission, which got extended till 2028. That was positive to stocks like APL, Apollo, High-Tech Pipes, and many more. Also focus on schemes for footwear and leather, spiked stocks like Liberty, Mirza International, etc. But let me tell you, budget was definitely negative for few sectors and stocks, which you should avoid, or if you have to look at an exit. And this starts from oil and gas stocks. They were lower than expected subsidy. The expectation was about 40,000 crore of subsidy for this sector, but what came was only 14,700 crore. This resulted in fall in stocks like HPCL, BPCL, IOC, etc. The amount of allocation, what was expected for defense, rail, road, shipping did not come, and this resulted in fall of many defense stocks, railway stocks, shipping stocks, and many PSU stocks. And also what is important is, even though there has been more or less same numbers of last year, which they have continued in these sectors or slight increase, the expectation from market was very high. In fact, stock market is always a barometer which works on expectation versus actual. Whenever Virat Kohli bats, we expect 100. So even if he scores 95, we say he did not bat well. But when Bumrah bats, we expect only 3 runs, 4 runs, 5 runs from Bumrah. But if he scores 10 runs, we will all be cheering. So what is important is what is expected and what was actually delivered. That is what makes a short-term move in market, and that is how sentiments play. Now, keeping all these things in mind, I want to tell you, yes, budget was negative to these stocks like HPCL, IOC, BPCL because of the reduced subsidy, and also defense, rail, road, shipping, PSU stocks did not do well because capital spending was flat or lesser than expectation. And stocks like BHEL, BEL, BML, HAL, RVNL, IRFC, RailTel, etc. all this saw fall of anywhere between 5 to 10%. And these are stocks which you have to avoid. To conclude, I say this was definitely a budget which was balanced budget. For me, it was a prudent budget. And yes, for me, this was a consumption-oriented budget. And this is my perspective. And given the geopolitical tensions what we have, given the global economic instability what we have, and more important, given the lower majority of Modi 3.0 government, and you know what went to Bihar. And because of all this, for me, this still was a very, very, very good budget. And let me tell you, this 12 lakh exemption limit, whatever came, was an answer by Nirmala Sitharaman to all the jokes and critiques and all the comments which were coming on social media for her. And yes, being an Indian, I am always a person who will first support an Indian budget than a US budget or a Sri Lankan budget or a Pakistani budget. And being an Indian, I first support Narendra Modi and then I support Donald Trump or let us say anyone else. And being a proud Indian, I first support my nation. And for me, yes, there were a lot of things which were very good. And yes, there are few things which could have been done better. And with an intent of goodness which was there in this budget, I really say this was a wonderful budget and a balanced act played for all the different sectors which was there, keeping in mind the current world environment and keeping in mind the physical prudence what is very much required. She did a great budget. And my last comment, when it comes to market, I always say you have to always understand long-term investing. But yes, short-term trading is where you create your capital to make a long-term wealth. And I want to conclude this with a statement from Radhakishan Damani. He is guru of Rakesh Junjunwala, owner of DMart company, and one of the strongest pillars or the top pillars of Indian stock market. Radhakishan Damani was once asked a question, is investment better or trading better? He answered it beautifully. He said, 95% of my wealth, what I have made till today, has come only from investing. Only 5% has come through trading. So everyone concluded, oh, it is good to do investing, not trading, because 95% of his wealth came only from investing, only 5% came through trading. But then he said, no doubt 95% of my total wealth, what I have done, has come from investing, only 5% has come from trading. But the capital required to make that investment and create that 95% of wealth through investing came from trading. And I will conclude with one more last statement. I have to only talk about investment and trading, and last 23 years I have only done this. And I can only tell you this, there are many ways to make money. Too many ways are there to make money. But there is only one way to retain the money made, and that is stay humble. Thank you.
Thank you, C.A. Rudramurthy. An economic perspective, again, he covered the even capital market also. Only thing is, he said India is growing better than US and China. Hope Trump is not listening this his opinion. Okay. So, yeah. So, anyway, we are going to cover the question answer sessions. So now I will go to the next session, direct tax proposals. CA Navin Kariwal is going to present the direct tax proposals. I request CA Navin.
Thank you. Meanwhile, before they are putting the PPT, now, yeah. My co-panelist, respected President and Vice President. Now, when last year, when July 23, on July 23rd, when Madam presented her budget, she told that next 6 months, I'll be coming out with a new income tax bill. It is not direct tax code. It is income tax bill only. And it will remain Income Tax Act 1961. It will become Income Tax Act 2025 or 2026, as the case may be. It is not direct tax code. In this bill also, when she spoke about this, I thought now there may be no other amendments. When she spoke, then I was sitting with Lalit at this Chamber of Commerce only. So we were sure, there will not be any amendments. But my dear friends, there are 86 amendments. If I go through the, the finer prints of the finance bill as regards direct tax proposals, around about 86 amendments. That is not the, fora to discuss all the 86 amendments technically. We will go with what is required for the crowd at large, mainly, the businessman, salaried class, as well as the professionals, what is required. So if you see on the day of the budget, Madam Nirmala Sitharaman came on the television at sharp 11. in an off-white saree, which was picked up, which was gifted to her by a fisherwoman, Dulari Devi from Madhubani district of Bihar, on November of 29th of last year, which she carried. And then, I don't know, she wore that saree on that day, and she even, tried to make payment to her, which she told, no, we do not take payment from our daughters who come to visit our house. So madam was touched, and, she wore that saree. Fortunately or unfortunately, on that day also, my vice president also was wearing the same saree. So in fact, she pointed out also, we were all together in the meeting. Coming to the proposals in the budget, what I will do is I will just take you to the PPT, but quickly we'll run through, what are the amendments galore. First amendment, hats off to madam. When Modi ji also came previous day and, in the newspaper headlines, I hope Goddess Lakshmi blesses me with peace and prosperity. And did Goddess Lakshmi bless the India, middle class basically? Because the dictum given to madam was by Modi was, I've managed to do for every section of the society over the past 10 years. In Modi 3, the 11th year, I want to do something for the middle class. What can you do for them? Straight away, the exemption limit was increased to 12 lakhs, was told by madam, and huge thumping of desks, and then Modi, sorry. The exemption limit is only increased to 4 lakhs, 0 to 4, nil. 4 to 8, it continues, we'll see. Why 12 lakhs? 12 lakhs, up to 12 lakhs, you need not pay tax, my dear friends, but filing of return is mandatory. You can claim rebate under 87A of the Act. So you continue to claim rebate. Up to 12 lakhs, there is no exemption as such. The exemption limit under the new regime only, 115 BAC. After 2 days from now, the new act will be presented, and we'll have an occasion to again, come and address people on the amendments made in the new bill rather. So again, I repeat, 12 lakhs is not the exemption limit. 4 lakhs is the exemption limit for all the, by default now, all of you are coming under the new regime, 115 BAC. So therefore, up to 12 lakhs, when there is no tax payable, is because you are going to claim rebate under 87A. How much? 60,000 rupees. So up to 12 lakhs, there is no tax because of the rebate, but return of filing is a must mandatory. Point number 2. Suppose I am not able to file the return. Now, okay, we'll see other scenarios also. What about the salaried employees? My dear friends, salaried employees, 12 lakh plus 75,000. So it's a great achievement. You are 1 lakh rupees per month salary. You need not pay a single penny to the government of India, no TDS. 12 lakh 75,000 standard deduction under 16 IA. So 12 lakh plus 75,000 standard deduction, then rebate, nothing to pay a single rupee. Today, 8.75 crore Indians have filed returns. 8.75 crore Indians. Now, because of these amendments made, the loss to the exchequer because of direct tax proposals is a staggering 1 lakh crore. 1 lakh crore is the loss to the exchequer. She had a very beautiful point, madam. What she was telling, I cannot, just go on. First of all, the tax slab itself is narrow. So I cannot, tamper with the narrow slab rates. So I want to, just increase, and she's done it 12 lakhs. Now, what about a business? If you are a businessman, 1 crore 50 lakhs is your turnover. What is 8% of 1 crore 50 lakhs? Yes, sir, 1,50,000. I mean, 1 crore 50 lakhs, what is 8%? Or 6% as the case may be. What, sir? 8%. So up to 12 lakhs, no tax again. Businessman, 1.5 crores turnover. 8% or 6% that case may be. You are a professional. 44 ADA you apply. 24 lakhs. Example, 24 lakhs is your gross receipts. 50%, 12 lakhs. Again, no tax. No tax. If you apply 44 ADA, then what happens? No need to maintain books of accounts. For business, it is 44 ADA. And if you are having everything through banking channel, then it is 6% tax. So 15 lakhs, 1 lakh, it goes below 12 lakhs. Again, for a professional, it is 50 lakhs. Your 48 lakhs, it is 24 lakhs. And if it is only 24 lakhs, up to 24 lakhs, 50% you declare, no tax, 12 lakhs. Again, remember very carefully, for short-term capital gain, for long-term capital gain, section 111A, section 112, section 112A, no question of getting rebate. Up to last year, you could get rebate from this assessment year, Finance Bill 25. My dear friends, there is no rebate of under 87A for all these 3 special types of income. Short-term capital gain, long-term capital gain, that is your 111A, 112, 112A. Now again, if you see another amendment, this is as regards the personal income tax returns are concerned. Now we will go to some other amendments which are of importance to the crowd at present. So rest of the, rest of the slab rates continue to remain the same. I have given some examples also. So what is the benefit? You please check this example. So you will get a fair idea. What are you getting now? My dear friends, what is the tax benefit for different category of taxpayers, 0 to 24 lakhs? If you see right down there, if 24 lakhs is my total income, as per the existing rate, it is 4,10,000. Tax as per proposed rate is just 3 lakh rupees. So I am getting a benefit of 1,10,000 rupees. What is marginal relief? Very simple, sir. Suppose your income is say 12,20,000. So what is your relief? Only 20,000. You need not pay still tax. Marginal relief you will get on the 20,000. Need not pay tax. 40,000 reduced up to 12,72,000. You will get that relief. That is called marginal relief. Not beyond that. Sir, IFSC will not be of use because for the simple reason. What is IFSC? It is there only in gift city of Ahmedabad. So Modi went on a tour to Singapore and Dubai. He saw the concept of IFSC there. He brought it to India. And whether resident or non-resident, you invest in IFSC. Suppose you are investing in banks also there. It should be stationed in the IFSC. IFSC is there only in gift city in Ahmedabad. Therefore, that provision will apply only to the IFSC. Fortunately, today in India or unfortunately, there is only one gift city and that too in Ahmedabad. Moving forward, sir. That was the amendment about IFSC. So these are all as per the finance minister's speech actually. So whatever will be relevant, we will discuss, don't worry. Yeah, charitable trust and institutions. Since 15 years, every day I'm going, whenever this February 1st comes, we are going all over India, deliberating. I have not seen a budget where there have been no amendments on charitable trust. Fortunately, this year, there are 2 amendments, but both are in favor of the assessee. So what are they telling? Any charitable trust, if you want to, you're filing your registration, when you file for your approval, either you are registered for 3 years or 5 years. Provisional is 3 years. If you commence your activities, then it is for 5 years. So now they are telling that will be extended to 10 years. That will be extended to 10 years, will not disturb you. And also what are they telling? 2 years, 1 year before and 2 years before, your total income before claiming exemption under 11 and 12 should not exceed 5 crores. Sir, this is the act. So therefore, pardon me, I'll have to go through the act only. I am trying to make it as simple as possible. So without giving effect to the provisions of 11 and 12, that is the exemption as per the charitable trust, it does not exceed 5 crores during each of the 2 previous years preceding to the previous year in which application is made. Let me tell you about the new income tax bill. Before me further. See, I am also a member, my institute, ICI has made me a member of the Direct Tax Committee in New Delhi. I am one of the member to have a comprehensive look at the new bill, the old act and new bill, and give suggestions to the government. We had meetings, we have given several suggestions, most of which will be incorporated in the new bill. By ICI has given a lot of suggestions. Now, what has Madam told now? What is the point number 1 is the new bill has been drafted by bureaucrats. It has been drafted by bureaucrats. Point number 2, they are telling today how many sections are there in the act, sir? There are 298 sections. So the 298 sections, what are they doing? Round about 120 sections are redundant and it will be knocked off. In the new act, you will not have all these redundant sections and they will make it only 50% of the new old act. So they want to make it lucid, clear, simple. These are the words used by the finance minister. Lucid, clear and simple English to understand. So therefore, this is the correct time you can have a relook at your profession. Those who are in the profession. So she is telling now, because based on the now, anyway, after 2 days, we'll have an occasion to go through the bill itself. So I am going to have a relook, she's telling. It should be direct, clear and simple. And then all the, most of the deductions will be knocked off. And therefore, she wants to reduce litigation. Now, how to reduce litigation? If you see in the Income Tax Act, my dear friend, there is a section, then subsection, then clause, then subclause, then proviso, then explanation, then, like this item, then sub-item. So one day I was telling Lalit, we were discussing. So I told you read, he told how to study the Income Tax Act. Karke. So like this, he just went on, he studied. I told you study like this. 1023C, I told him to study. There are 33 provisos in 1023C. Now anyway, last year it was deleted, 33 provisos, he started studying. Then he told, with great difficulty I studied, at the end it's written deleted with effect from. So I told, that is not the way to study Income Tax Act. You come down, study, then go up. Karke. I spent 1 hour, 2 hours to studying. You told me to study. This is how I studied. So now beware, my dear friends. In the new act, there is only section, subsection. There will not be any proviso. There will not be any explanation. There will not be any clause or subclause or item or sub-item. They are telling now it will be only section and subsection. We cannot remove subsection, sir. That is what, I was sitting with the other day. Chief Commissioner of Income Tax, Chennai was there, TDS. He was also telling, sir, I have also been given 3 sections. I am doing on this karke. So every day, Saturday also, I am sitting up to 8 karke. So the PMO is pressurizing us, you have to put the bill in the public domain now karke. So all of them have been given targets. So this is a most important amendment of the Modi government since he took up as the Prime Minister of this great country, because, this Income Tax Act, which is 1961, after 60 years, now it will become Income Tax Act 2025. And I am sure, more or less it would be simplified, more or less, because they have the 60 years record. And then they have a lot of Supreme Court judgments. So they would have taken all those judgments. They would have tried to make the English simple. Anyway, it is for us, to go deeper into the fine prints and then, give their interpretation. Moving to the next amendment, sir. So this is about the charitable trust. So here and there, only what are important, we are doing it. You move forward. About the ULIP. So what are they telling? See, there are ULIP policies, there are other life insurance policies. There is section called 1010D of the Act. And how much the premium? It should not exceed more than 10% of the sum assured. So if it is more than 10% of the sum assured, you are going to invite 4th proviso, 5th proviso, 6th proviso, 7th proviso of 1010D. Don't worry about the sections. It will become taxable. What is the government telling? Sir, if you have violated the provisions of ULIP, that means more than 10%. That is more than 2,50,000, etc. premium. You pay tax. How to pay tax? It will be considered as a capital asset and you have to pay tax. What about other life insurance policies other than ULIP? They are telling this will be taxed under the other sources. So now government is saying it's crystal clear. If it is a ULIP, please consider to be capital asset, pay taxes, capital gains. Other than ULIP, other life insurance policies, there is a violation of those provisos. That is more than 10% premium, etc. There 5 lakhs, here 2,50,000 and the 10%. So that also they have made it clear. This is taxed, ULIP will be taxed, it's a capital asset at 45 subsection 1B. Only to be remembered till this new bill comes. And then, as my good friend was telling, about the 2 houses under, self-occupation. What was the laws are prevailing? You can claim exemption from 2 houses subject to the condition was there. What was the condition? I am residing at some other place because of my business profession or my employment. So now they are telling that condition I am removing. Any 2 houses out of 3 you claim. Any 2 houses out of 3, please claim exempt. You need not offer to tax, used for self-occupation. The 3rd house, you please offer as deemed to be let out property. So that condition is no more there. And for startups again, 80 IAC, he has extended the period. Every budget it is coming. It's extended now up to 5 more years. Straight away up to 1st of April 2030. The startup provisions. What are the startup provisions? Where turnover should be less than 100 crores. Then, the startup is holding a certificate of eligible business from Interministerial Board of Certification. The startup is incorporated on or after 1st of April 16, but before 1st April 25. Then what is the deduction you get, sir? 100% business profits or to an eligible startup, and it's allowed for 3 consecutive years out of 10 years. Move forward, sir. Now again, TDS. Lot of amendments are there. Rationalization of TDS rates as well as slabs. Now, TDS would be interest here. Interest on securities, it is nil. Proposed threshold is 10,000. 194 is interest other than interest on securities. For senior citizen, what is the limit now? It is 50,000. 40,000 is in case of others. And when the payer is a bank, cooperative society and post office, that 50,000 has now become 1 lakh. And 40,000 has now become 50,000. Whereas in case of others, that is your private money lenders, etc., what was 5,000 has now become 10,000. Then 194, dividend for an individual shareholder. What was the threshold limit, sir, for TDS? 5,000. It is now increased to 10,000. Then income in respect of units of mutual fund, it was 5,000. It is now increased to 10,000. Similarly, lottery, crossword puzzle, etc., it was aggregate of amounts exceeding 10,000. Now they are telling 10,000 respect of every single transaction. Then insurance commission was 15,000. It became 20,000. Similarly, 194G, income by way of commission price on lottery tickets, 15 became 20. 194H, commission or brokerage, 15 has become 20,000. 194I, what was 2,40,000 is now 50,000 are part of a month. It is not 6 lakhs. Even madam made a mistake. It is not 6 lakhs. The bill is telling earlier it was 2,40,000 during financial year. Now it is 50,000 for a month or part of a month. It is not 6 lakhs. Then fees for professional or technical service, what was 30,000 is now increased to 50,000. Then by income by way of enhanced compensation was 2,50,000 increased to 5 lakhs. Move forward, sir. Yeah, now for TCS. Now for TCS, if you see, what is the important thing? Only important thing we'll discuss. Sir, there was 206C1H for the sales. The seller also has to deduct, buyer also has to deduct under 194Q. So representations went telling that it is becoming difficult for the seller to check whether the buyers have ensured compliance of TDS deduction and 194Q. So what will happen? He will also deduct TDS. This fellow will also deduct TCS, collect TCS. So now TCS is abolished. Goodbye TCS. Now you have to do only TDS on purchases. No more the seller would collect TCS under 206C1H. And again, there was this section of 206AB and CCA. What was that? Suppose the deductor and collector, they have not filed the return of income. Then 20%. Now they are telling, no, even that, we remove that condition also. How am I to know whether that fellow has filed return of income? I have no information. So they have removed that. However, non-PAN cases, you cannot escape. That higher rate of TDS will be there. Higher rate of TDS or TCS. Yeah. Move forward, sir. See, this block assessment search, I will not go into detail. But in the meaning of undisclosed income, the word virtual digital asset is added. That is cryptocurrency. From now on, my dear friends, be alert. See, what is this crypto asset? See, even this new act, why amendments are made, why the act is reduced, it is only based on now technology, sir. All the section Income Tax Act, now, see the portal, how beautiful it's working, CPC. Today I am filing the return. Many of my clients will call. I will not go for the negative part. They will tell, today return is filed, next 1 hour return is processed. Next day I have got called, sir, I have received the refund. Karke. Small refund, 17,000, 20,000, they have received. It is processed so beautifully. You go on the portal, log in. Please log in, go on the portal. There is something called as AIS, TIS. 26 years you want, you can have a look. What is AIS, TIS? Now you have made payment to credit cards, it appears. There is short term, you have sold shares, you have sold securities, it appears. You have deposited cash, it appears. You have withdrawn cash, it appears. Then you have purchased a property. Government is interested in the TDS rate of 1%, 194IA, any purchase of immovable property other than agriculture land. It appears there. Why? Because they are interested in capital gains. They are not interested in 1% TDS. Why? All this information is there. Don't file the return without looking into all this information. From this year onwards, because of the crypto asset, now information about this crypto asset, virtual digital asset will also be made available online. 115 BBH, how to calculate? You consider crypto asset as capital asset or income from business or other sources. Law is telling, forget all. 115 BBH, take that sale consideration, less only cost, nothing else, no loss. No carry forward of loss, no deduction, no exemption, only the cost. and pay tax at 30%. Whether you treat as other sources, whether you treat as business, or whether you treat as capital gains, we are least bothered. So crypto, now, please, it will come details now. Suppose your client now, when you file the details are coming. You are thinking, government will not know karke. Already information received. Where from this information comes? Unity building, when you go, on the 6th floor or 4th floor, there is a thing called as I&CI. What is I&CI, sir? Have you been there? I&CI. Intelligence and Criminal Investigation, it is called. So I happened to ask the commissioner, your income tax department, why are you calling yourself criminal investigation? Intelligence and criminal investigation. Okay, he has not declared. You tell him to declare income and pay tax. Even he had no answer. He was laughing. So I&CI has got the information. What is their job? Collect all the information. There is a project inside in Delhi. There is a project inside. It mines and mines information. The department is sitting on huge information. That information from I&CI. Suppose you are getting rent 1 crore. You offer to tax 50 lakhs. That information I&CI notice will come, sir, to all of you. But you are not seeing that. On AIS, notice will come. Whatever information there in AIS, there are 3 types of notice which will come online. 133(6). They'll give you first opportunity, no response. Second opportunity, no response. Third opportunity, no response. Then the case will be reopened, sir. Reopened under 148. You have declared 1 crore. I am not telling you have not declared, but you didn't respond to that. And it is available online. Please go log in, check that AIS. And you have to tick there. A bulb will come. Bulb will tell that response is mandatory. You have declared 1 crore. For example, 50 lakhs only withdrew cash. Yes, 50 lakhs is covered in the books. You have got the source. Please tick it, sir. Please reply. If you don't reply, unfortunately, the case will be reopened 148. Up to 3 years from the end of assessment year, I can reopen. And I can't go beyond 5 years and 3 months. That is a beautiful amendment made. Last year budget, beyond 5 years and 3 months, I cannot go. Now the last amendment, before I hand over my baton to my past chairman, Ravindra Kore, there is a concept of updated return. What is updated return? Sir, more professionals will understand that was nothing but the revised return under 139 subsection 5, 1 year from the end of assessment year. Now what has happened? They are telling time limit to file return is over. Time limit to file revised return is also over. Up to December was the time limit. So now what to do? Your client has come. Sir, last 4 years return I have not filed, sir. Last 4 years. December over, sir. So today I cannot file the return, sir. I cannot file a return unless it is an updated return. So what is updated return? Under 139(8)(a), earlier I could file how many years, sir? I could file for 2 years, up to 12 months, beyond 12 months, up to 24 months. If I am filing the return up to 12 months, what is the quantum of penalty? 25% of aggregate tax and interest. If the return is filed beyond 12 months up to 24 months, quantum of penalty is 50% of aggregate tax and penalty. Now, madam is telling 90 lakhs Indians have filed the returns. 90 lakh returns have received as updated returns. I am very happy. She has used certain beautiful words. Trust first, scrutiny next. So, intention of the government now. I am giving you, I believe my middle class. Trust first. You yourself have declared 90 lakh returns. So, now she is telling 2 years, I will allow you 2 more years. Go beyond 24 months up to 36 months. Go beyond 36 months up to 48 months. But with the added tax, sir, 60% tax, here 70% tax. So for 4th year it is 70%, for 3rd year it is 60%. So choice is yours. Suppose you are searched. You are searched today. What is the rate of tax, sir? Rate of tax is 60%. So update return, you check 1st year, 2nd year, 3rd year, 4th year. It is 25%, 50%, 60%, 70%. So this is the concept of update return. And now suppose there is refund. Increase in refund, I cannot file updated return. There is increase in loss, I cannot file updated return. You have received notice under 143(2) scrutiny or 142(1), I cannot file updated return. You are under PMLA, Prevention of Money Laundering, Benami Act, etc., etc. I cannot opt for updated return. There are certain conditions. So you have to fulfill all these conditions. The last one, only thing lacking the budget, otherwise I would give it 10 out of 10. Only thing lacking was I was expecting something for the MSMEs. MSMEs, madam, has increased the investment as well as turnover. But the draconian section continues to be there in the statute, 43B clause H. I purchase goods from the micro and small, not MSMEs. So it is only micro and small. It is not medium. If I purchase goods from MSME, my supplier is micro and small, I am not able to make payment under section 15, time limit specified on MSME Act 2006. Then everything will be disallowed, sir. That is, I thought at least they could have extended up to the date of filing return. There is no such, there is no such relief in this budget. So the problem is because the turnover and this investment is increased now, small and micro, MSME, micro, small and medium. So now more additions would happen because more units, they come in that definition. So be careful, MSME, government has given other doles, they have given other benefits. For Income Tax Act 43B clause H, there is no amendment. Even if you were to make payment one day after the due date, the purchases, then law is telling I will allow, but in which year? That's all. I will not allow in this year. It is a permanent disallowance. Thank you very much for patient hearing.
Thank you, Naveen, for your, as I know, you are a very good cricket player. You went through all the provisions, amendment, what is required for our business community. Hope once anyhow Nirmala Sitharaman madam told, after 1 week, we are coming up with new income tax act. The more enlightened and more things we need to be discussed for enlightening our business community. Thank you, Naveen. Now I request CA Deepak Kumar Jain kindly present your perspective on the indirect tax proposals. Over to Deepak.
Yeah. Am I audible now? Yeah, wonderful. So very happy to see the audience here, both physical and in virtual. We have about, to my mind, 225 to 30 people joining both. It is really encouraging. While we certainly expected more number of participants, but I'm sure having this number in the kind of information age which we have, where information kind of comes to us on WhatsApp immediately. So still to kind of have this number is really encouraging. Thank you so much for all who have kind of come here and been part of this wonderful event which we intend to kind of organize. And let me also kind of thank FKCCI and my panelists and speakers. It's been 9 years with FKCCI and really a wonderful journey for us to partner and share the points which have kind of come from a direct tax and indirect tax and from the general perspective to kind of ensure that the knowledge is kind of disseminated. So that's the endeavor. And we've kind of carried this for 9 years now. So that's really, really happy that way. On the budget, I think with Rudra kind of giving an extempore speech, I think he gave his perspective, his years in terms of what he said, 23 years of experience, which he kind of brought in. How capital markets reacted is not what you kind of take it for the reading of the budget. I'm sure the way Naveen kind of the way he was running, those were equivalent to the runs which he scores in cricket. I think that's how his slides were actually moving. So that's the quantum of changes which have happened in direct tax. Indirect tax, largely with GST kind of coming in, GST Council takes all the decisions. So therefore, the budget in indirect tax particularly is very, very customary. So I'll do my justice to kind of ensure that whatever changes have kind of come in, I'll kind of try and kind of make this audience aware so that we are able to kind of learn together. From Nirmala Sitharaman's, this was her 8th budget. And first to 8, I think the journey she's kind of traveled very, the first budget to the maturity which she brings in the 8th budget is really, really wonderful. I think the common man's ask was well answered at the end of the budget. She kind of kept it to the end so that the cream is kind of, or maybe as Rudra also brought it out, the maximum number of memes which kind of came in terms of the popcorn probably kind of got answered through this one amendment. Certainly, between the fact that we are moving to a new income tax bill, which is soon to be an act, it was very important to kind of move away from the exemptions and deductions, and that's where I think this budget is kind of done. If we look at the numbers, right, how direct tax and indirect tax has done before I kind of move on to my slides in terms of changes. Direct tax has probably traveled a little faster in terms of growth than indirect tax. if we were to kind of look at direct tax numbers in say 21, 22 to say 25, 26, the gap between direct and indirect was about 4%, which has grown to about 18% in this budget estimates. Why is that? Is largely because direct tax has grown at a faster growth rate in terms of the growth percentage year on year is faster for direct tax than indirect tax. Maybe the digitization probably has played a pivotal role for ensuring, I mean, for as assessees, the fact that my income is kind of coming through digital. Earlier, let's say a doctor was earning predominantly in cash, so he had a choice to kind of declare how much he desires to kind of do in the return. But now most people who kind of go to a doctor pay digitally, so he is I would say, practically required to kind of disclose the entire income. So maybe the direct tax has probably seen that kind of growth. Indirect tax has largely seen the customary 10% growth. Even 10% compounded doubles 7 years, and that is what we will kind of see in the next, probably the next 2 years before when Nirmala Sitharaman probably completes her 10 or crosses Moraji Desai's number of budgets. In that year, probably the total tax revenue should also kind of cross about 50 lakh crores. So that's the quantum of revenue which we are talking about. How 2/3 of that kind of comes from taxes and 1/3 comes from non-tax. So that's how this slide kind of desires to kind of say. And from a GST perspective, from 2017 to now, 7,40,000 crores, touching to about 22 lakh crores. I mean, this number of 24-25, which is 18 lakh crores, is for 10 months. So if you were to extrapolate it, we should kind of be achieving for the year, fiscal year 24-25, a number of about 22 lakh 10,000 crores from GST collections. Interestingly, there are about 1.5 crores assessee, and predominant of them are individual and partnership firms, while maybe about 90% of them, in terms of the number of registered assessees, are sole proprietors in partnership. But in terms of the contribution, I think the corporates, while they may be they contribute about, while they may be 7% in terms of number of registered assessees, but they contribute about 65% of the total revenue. And in terms of assessees who have turnover of, let's say, more than 50 crores, which is 500 million, they themselves contribute about 70% of the total tax collections under GST. So that's the interesting kind of dynamics in terms of the numbers. In terms of the amendments, I'll probably, while there are very few, but still what is relevant to the audience, which is both attending in person and virtual, I'll probably kind of limit it there. So there is possibility of me skipping a few. So please excuse me on that. And I'm sure at the panel discussion, we also need to have time. So that's the reason why I'll be skipping them. And in the panel, we have both Jayanta, Sunil, Rudra, Naveen, and myself. So I'm sure we will have good time to kind of whatever questions which you kind of have, please feel free to kind of raise it during the panel. And those who are attending virtually also, please, if you have questions, raise it in the Zoom call so that we can kind of take it as a print and give it to Mr. Ravindra Kore for his moderation. In terms of the provisional assessment, so provisional assessment, what happens when you're not able to assess, when you file a bill of entry under customs, you intend to kind of assess it and pay whatever is the applicable kind of customs duty. But if you're unable to determine the correct duty, the law provides you to kind of assess them provisionally. The time limit has been extended. What was 6 months is now extended to 2 years. And many times there are, while you have the online system in customs where you can do certain corrections, but the correction cannot lead to reassessment, right? The current system. So the budget, I would say, has a welcome amendment which allows now to do correction. So the manner, that is the form, time, and manner, will be kind of notified, but it is I'm sure it will also happen through online, where whatever bill of entry which we have filed, be it in terms of correction of the HSN, be it in terms of the rate, be it in terms of whatever particulars have been kind of mentioned in terms of the bill of entry, can be kind of corrected. And it is expected, while you can kind of now do correction up to 1 year, we'll have to wait and see how much time they provide, but having a period of up to 1 year, I'm sure would be reasonable that way. So that will kind of allow, while it is a self-assessment, it will allow correction of the data, which is an important kind of do. So I'm sure once the data is kind of corrected, how it will seamlessly flow. Many of the data actually flows into the GST. So if there is a correction, and how it will kind of, after amendment, move into GST, something which we will have to kind of look at. So as of now, with the integration, now the entire GST is all to do with, as Rudra also said, not beta, but data, right? So data is very, very relevant. So for us, it is very critical to also see with the way in which we are integrated in terms of be it income tax, be it in terms of other portals. So the correction which will kind of happen in terms of custom, how it will kind of flow into GST is also something which we will have to kind of interestingly see. But I'm sure it will kind of flow on as you have amendments in GSTR1 which flows in. I'm sure there will be a proper way where the amendment will also kind of flow in here. In terms of the rate changes, customs, I think as in the budget speech, as the speaker, Madam Nirmala Sitaraman did mention, the changes were probably guided towards increasing the be it in terms of Make in India or probably kind of protecting the domestic manufacturers. So there is where be it in terms of EV or be it in terms of, let's say, mobile phone parts or be it in terms of electronic components and toys or such changes is what we have kind of seen. So largely, the customs duty has seen a favored impact as regards wherever they are used in the manufacture of a finished product, and wherever the intention is to kind of protect the domestic manufacturers of a finished product, those items have kind of seen a higher rate of duty. And interestingly, there are certain tinkering in terms of basic customs duties and the agriculture cess, which basically overall the cost kind of remains the same, but nevertheless there is a movement from one head to the other head. So that's what. So if you see the first one, 20% reduction BCD, while an equivalent kind of increase in agricultural infrastructure development kind of cess. So that's how they have kind of done that in terms of the rate changes. And from a GST perspective, in the current, when I, as a distributor, let's say, for example, I receive invoices pertaining to other branches. The unit which receives those invoices is not the recipient of the goods or the services. So under the ISD, it is mandating me to kind of distribute the services which are pertaining to the other locations. Currently, in terms of the distribution, while I may distribute domestic reverse charge on domestic services, but import was something which was not kind of enabled. This change which has kind of come into the GST Council meeting also enables me or requires me to also distribute reverse charges. And in terms of the definition, I mean, of the local authority, there is a term for municipal fund and local fund. While the term was used in the definition of local authority, but it is not defined. What happened is, certainly there are beneficial. One is in terms of services rendered by local authority themselves, and services which we also kind of render to local authorities. So there are beneficial rates. Now, there are certain transactions where, I would say that there was probably certain ambiguities on the meaning of local authorities in certain cases. The understanding is that a local authority under Constitution is an elected body. That is where people, you and I, elect them. And that makes, even if who basically manage a municipal or a local area. And consequently, they also have a fund which they are empowered to kind of collect in the form of tax, cess, or other fees or otherwise. So that is a local authority, and that alone will have those benefits or the concessions or the provisions which are enabled under the law. But equivalent to them, there are also enacted bodies, like you take the BWSSB, which is an enacted body. Now, BWSSB also has the power under those enacted statute to also collect taxes and fees. So there was an ambiguity whether because they also in many times also perform, let's say the Noida authority, there may not be a municipal in the region of Noida. Noida themselves, kind of Noida authority is also an enacted body and not an elected body. So there was ambiguity whether such bodies will also be a local authority. I think they have kind of now defined the term municipal fund and local fund to say that yes, it should be something which is through the elected and not enacted. So that kind of takes away, and I'm sure there are a lot of litigations in and around that. So the intention was to kind of set aside or probably give rest to those litigations also and say that yes, probably services of those will be taxable on forward charge. And in these cases, wherever it is through elected body, through reverse charge or of that nature. In the context of vouchers, again, there was a Supreme Court decision. We all know that the vouchers which we buy are basically an instrument in money. Like say you go to a bookstore, you take a gift voucher. When you buy that particular voucher, it enables you to kind of redeem it for that particular kind of goods or services which the store offers. And in some cases, while it's a money instrument, you don't know what type of redemption is possible. Many times the redemption is something which is very wide. So at the time when you kind of give those vouchers, the person who's redeeming it may only know when the redemption kind of happens. So there were ambiguities on in terms of, because the taxability under the GST law advances the liability to the receipt of money. So in cases where you receive vouchers, the understanding is that you have already received the consideration towards a future supply. So there were notices being issued to kind of tax them. But because you didn't know what nature of goods are, you were paying tax at one rate, and at the time of redemption, it was kind of creating a problem. So there were decisions in favor to say that yes, it's an instrument of money, and from a time of supply perspective, it should be taxable only when the redemption happens. Now they have kind of done statutory amendments removing vouchers from a taxability perspective. They have kind of categorized them as neither goods nor services. So supply of vouchers is like a money instrument. It's like money paid in advance, and taxability will kind of come in only at the time of redemption. So again, it's a welcome kind of amendment. And in terms of credit notes, we know that yes, credit notes are with IMS kind of coming in. It is very important for us in terms of those who file their returns, who receive both and who render both goods and services. You have credit notes which are ordinarily issued. Now, while in terms of my purchases, right, I'm whenever I have kind of done any purchases and I want to kind of return, so through the IMS system, I'll have to kind of accept the debit note or the credit note. Now, if I have raised a sale invoice and I have a credit note, while I may have kind of declared in my GSTR1, but now with the new IMS system, it will require my customer to kind of accept the particular credit note. And now this amendment, which also kind of brings in to say that when the credit note is kind of issued to a person who's registered, his reversal through the IMS will ensure that that's the time when you can kind of claim reduction in terms of your output taxes. So it kind of creates, so from a GST perspective, the check and balance between the supplier and the customer, and probably the interactions or the continuing interaction between them, is something which is very, very necessary. So there could be complexities in terms of me doing whatever, and probably, let's say, I'm not in my talking terms with my customer, and my customer therefore intentionally either does not accept his kind of in the IMS portal does not accept the credit note, will require me to kind of not be able to kind of claim the benefit of reduction in terms of my output taxes. So there are these complexities, but nevertheless, law is what law says, and that's where this amendment is, which basically requires me to kind of ensure that the reduction will kind of come in only when my customer kind of accepts it. Similarly, Safari Retreat decision of Supreme Court was very much talked about. In fact, the law under Section 17(5) had a specific restriction to say that if you're using any goods or services for construction of a mule property, you cannot kind of take credit. But the Supreme Court, in the context of Safari Retreat, interpreted that in certain context, you could kind of regard the immole property to be in the nature of a plant. And if it is in the nature of a plant, then purchase of goods or services, because the term used under 17(5) subclause C and subclause T, the term plant and plant or machinery was used differently. So they probably looked at that there should be a statutory, or maybe the the person who drafted the section certainly would have choicefully used the word or and interpreting that to be the Supreme Court specifically mentioned that yes, if like say there many times you construct a building for it to be kind of let out. So for me, for others it may be an immole property, but for the person who's kind of constructing it, it is in the nature of a plant, and therefore in those cases they should be eligible to kind of take credit on. They didn't hold it that way, but they said that there is good reasons for it to be kind of considered as eligible for taking credit. Now, under this finance bill, they have kind of done here again, consequent to the GST Council's decision, they have kind of specifically kind of ensured that retrospectively, the error in terms of the draft, if I can call it that way, is corrected, clearly mentioning the legislature's intent not to allow credit with respect to such immole properties. So that's the intention. And in terms of the IMS facility also, while the IMS has been in terms of what do you say, the way the GSTN kind of issues in terms of advisory and kind of bringing about in terms of compliance, IMS in terms of process is already there in terms of the filing of the returns. But backing in terms of the statute was not there, and which is what this amendment, which kind of brings in necessary statutory backing to say that when I'm asking for a particular kind of requirement under law, it is kind of also contained. So requiring the purchaser to kind of do certain certain actions, and requiring the seller or the supplier to also do certain actions is also now codified in terms of the law, requiring the seller and the buyer to kind of do that in line of the requirement for IMS. And in terms of the pre-deposit, many times when we file appeal, wherever it is tax and penalty, the pre-deposit is always computed basis the tax. But in certain cases where there is only penalty demand and you desire to kind of go on appeal, now the mandate requires me to also compute the pre-deposit, even if there is only a penalty demand. So if I want to kind of go on appeal for a demand which only has penalty, I need to kind of pay 10% pre-deposit, which is what the amendment also brings in. Likewise, this is something which is much needed in terms of the amendment. So whenever there is a supply from, let's say, an FTZ largely is a pass-through. That pass-through in the sense that if I'm wanting to kind of export goods out of India, I keep the goods in a warehouse before it is kind of exported. Likewise, if it is an import transaction, anything which is coming from out of India, I keep it in a FTZ, which is a storage warehouse, before it is kind of cleared domestically. Now, under the SEZ Act, the Free Trade Warehouse, or even the SEZ per se, right? So the person who's kind of buying from them is anyways paying customs duty. So while they may be from a location perspective, they may be within India. So there were ambiguities in terms of whether I need to kind of get separate registrations under GST, and for transactions of supply, because I could sell within a warehouse, right? For transactions of a supply in an FTZ or an SEZ, whether the transaction will kind of be subject to GST. So now they have kind of corrected and said, or probably I would say the anomaly is kind of removed to say, similar to say a sale of goods in warehouse, that yes, if the supply of goods from a warehouse, which is in SEZ or an FTZ, that transaction is neither supply of goods or services. So likewise, it is kind of removed from a taxability perspective. And very important in terms of an amendment for control in terms of movement, they've kind of introduced section 148A, proposed introduction, which requires some kind of a unique identification marking on those goods, which have to be electronically kind of stored. And largely what nature of those goods and what they be is something which will be kind of to be notified. But the intention is to kind of ensure that there is some kind of a tracking mechanism for those kind of goods. So whether it is for let's say jewelry, whether it is for pharma, what nature of those goods government is yet to kind of notify. But the enabling provision requires me to kind of say that yes, if those goods are notified, I'll have to kind of ensure that there is some kind of a unique identification. So from the sourcing of purchase to storage them to in terms of supply, wherever it is kind of going in, I need to kind of maintain record, and also in a form which is digital. And if I don't do so, there are significant penalties which are intended to kind of be levied. So largely these were, I would say, the summarized changes which I intend to kind of show. Now I'll probably move it on to the panel. So in the panel, I invite all of you to kind of ask whatever questions you have. So it's one opportunity. We have really wonderful people on the desk. So please raise whatever questions you have, and we'll be happy to kind of clarify. So thank you so much for this opportunity. Really love the interaction here. Thank you.
Thank you, Deepak. While you were going through even though GST Council is separately handling about GST, there are so much of amendments in the indirect tax proposals. So before taking up the formal question and answer, as in Economic Survey of India, it says service sector is performed very well. So quickly, I request CS Sunil Dhareshwar to give on his perspective about the budget, especially in the service sector side, quickly.
Good evening. I hope everyone can hear me. So, if you were to ask me on the budget, I know Rudramurthy did mention about from whose perspective that you're looking at, which I think is partly true. But at the end of the day, we also need to look at the overall country and the economy. Over the years, the way the government has looked at the growth of the economy has been more from a supply perspective in terms of the capex, spend, which has been there, the infra spend. And we've been used to the significant funds which have been allocated to capex and infra. A couple of years back, there was a significant jump of almost 30-odd%, which was the main item, if I can say, on the budget. The government has now switched from a capex spend budget to a consumption-driven, economy for growth. So it's amply visible if you look at the things that they've considered to do across, a couple of sectors which are there. While there's been a lot of talk on the personal income tax, which obviously is going to give an impetus with about 1 lakh crore, which is now available to be deployed, which definitely I think times have changed. Earlier, any amount of additional income would typically go into, savings. Everyone would want to put it in an FD, is what would be the safest thing to do. But with the current generation, the expectation is that this will come back into the economy in the form of, consumption in terms of spend in various, sectors. So that's one part, in my view, in terms of how the budget has been crafted. You also look at, while we've spoken about other industries which are there, we've not really looked at what has been done on the agricultural side. The FM has actually started with the agricultural sector, and there have been a whole host of initiatives that have been announced, almost about 8 or 9, which in a way is to also get the rural economy to grow. The last few quarters, we've seen most companies which have been doing in FMCG and all of that saying consumption is coming down both in urban and more so in the rural areas. So I think that is another area or a sector that the FM has focused on. So if you look at both in terms of what has been done for the middle class, which is largely in urban areas, and if you look at the rural area, which is mainly agricultural driven, the expectation is that with the initiatives that have happened over there, the productivity is going to increase, which will also, they've done things around storage of, agricultural products. A couple of centers of excellence have been, set up. They've looked at pulses, they've looked at cotton, they've looked at makhana. So across the agriculture sector, which is primarily rural, is where the expectation is there will be more in the hands of the farmers of the country. So I think these are two large ones which are there. From a services sector perspective, I think not really much has been done. I think we moved from agriculture to services directly. We have this thing which we say in the IT industry that before the government could know what was happening, we actually were able to build a very well established industry. So from a services sector, not much has been, in my view, has been specifically done. However, having said that, a lot of this spend which is happening will move into, quick commerce and some of the other industries which are there. So I think that's where I think the impetus which will come in from this budget. So overall, I would see this to be a more inclusive and a sustainable budget, which is driven more from a consumption rather than from a capex spend.
Thank you, Sunil. Even though they have mentioned the budget also Grameen credit score, so for SHGs and all, and again agriculture sector also they have mentioned, but many are initiatives will be an tech based. They have to improve it. Hope that will given indirectly for the service sector. And coming to the, I request CA Jayant Chatterjee to on the manufacturing sectors. What is your view on this budget? Kindly, quickly, if you go through that, then we can move on to the our question answer sessions.
Good evening, everybody. I think, thanks for your waiting. I think it's almost more than an hour that you are hearing us. I find, as I take the last line from the rest that, it is like a sustainable budget. And if I take the word from, Madam, on that the government is keeping an ear on the soil, on the land, and an eye on the sky, I think it makes sense, because when we talk in the corporate world, we speak about that how we are trying to, make China +1. So if you have to make China +1, then you have to increase your manufacturing area capabilities. And I feel that in the budget, that what she spoke and the direction which the government is trying to make it, is they're planning for that. They're preparing that, India take up the opportunity of manufacturing out of India, so that we don't only just expect. It is not it's sometimes they call it is more of a potential than a performance. So we can actually perform in capturing the world more from India and from in the manufacturing and export. And if I take it, I think the other point which attracted me in the budget is that, it has been more of a budget which will sustain. Today, we may look for manufacturing. We are looking for the urban area. So we need to look at the rural area also. And I think the four, engines that they put it, I think agriculture is one thing which is very important. And as an industry, like, I come from ABB, we also support for the automation of the in the FMCG. And the FMCG, most of the products, they are from the rural areas. So agriculture is one of the key things which they've touched upon. And growing with the quality of food and the product, I think the seeds and the other thing has very nicely been augmented. But I only feel that, we implement in the way that the way it is designed, and then I think we can achieve that level where it is expected. So my take is that, I think we are good, nicely poised. We have spent 10 years. We saw the government, how they want to drive. It is good that we have the same government for so many years. Nothing political about it. Maybe any government can continue. So with the direction that you may make the change, you can bring the world, that what we want to do. And India, if you see, we have around 100 CEOs globally who are Indians. We have Indians everywhere. We have talented people in the country, be on services or in the manufacturing. But if we cannot grow the manufacturing segment, I think we will lose out. We are seen more as a service driven country than the manufacturing. So if I see my company also, we are trying to promote more manufacturing in India. So localization has been key for a couple of years, and we have been doing it now. So I find it is quite good, and it is for all of us. And being in the Chamber of Commerce, I think you as a maybe a industry, so we should take this opportunity to grow and take the advantage, so that maybe it is not a political party's view, it is a view of the country, and we can all take to that next level of growth. Thank you.
Thank you, sir. They have also mentioned the Make in India concept in budget, leather industry and especially toy industry. The China is majorly taking stake. So they wanted to promote manufacturing in India. Hope that will be a positive note. So my first question to Sri C.S. Sunil Dhareshwar, sir, with AI replacing human work, particularly low-end work in the short term and complex tasks, as the technology matures, how do you see a challenge to India, which is largely an outsourcing hub?
So the latest buzzword is AI. No discussion or an event is complete without having some reference to AI. So at a certain level, it definitely is a buzz. We should possibly accept it. But the way forward is definitely going to be a reality in terms of how AI will impact, every person in their possibly personal life and professional life. I remember our ex-CEO Vishal Sikka mentioning about 6 years or 7 years ago, saying that if you go to a particular restaurant, you just have to put your hand on the table and it'll tell you, these are the things that, you have possibly, ordered over here, and it'll give you suggestions on what you should consider to do, right? This was many, many, many years ago at a personal level. Coming back to, how we should look at AI, I think there is a lot of concern on, whether it'll displace jobs. We should look at it as being, AI as being an assistant. It is going to help you to get to do your work better. To a certain level, there are certain repetitive things that you would possibly be doing, which now can be done faster and more efficiently, which means that all of us will be able to kind of do more value added activities, which other able to do. So at a certain level, for example, even in the IT industry, there is this thing about coding, which otherwise would have been done by, the software engineers. A lot of it can actually be done automated, but it's not going to give you the final solution. So you do need to use, large, language models in terms of training the AI, in terms of what needs to be done. We also need to ensure that we do what is called as responsible AI. It does give a lot of opportunities. That's the way we should look at it, because every, challenge that is there also comes with an equal set of opportunities which are there. So a couple of things that I think we should look at doing is what I would call as, upskilling, unlearning and learning, use of technology. We should not be afraid of it. I think we need to embrace it and incorporate it into the way we're doing our business. Whatever efficiencies that you're able to build in is how, you would be able to engage with your clients. And at the end of the day, the benefit is to be shared. That is the way to move forward. So one, while there will be some level of impact on certain activities or certain work that is being done by a set of people, they need to get trained in terms of doing things that they were not doing before, so that you use AI to help in terms of building in efficiencies, build new technologies, which you're able to take to your customers or incorporate into your business. So if you're not taking this to your clients, you look at it in terms of how you make your own business more efficient, which obviously means that it brings in better productivity for your own internal systems. And you possibly have a more larger market that you can then look to address. So I think we should not be afraid of it. We need to embrace it and see how we can benefit out of AI as we move forward.
Thank you. Before I'm taking in the perspective of Jayan sir, I thank the Vice President Sairam Prasad for presenting in this session. Thank you, sir. Sunil, that everyone is raising about this AI, whether India is going to lose a job or what to do with the next thing, even including professionals also facing that AI effect. So in the same question, I request Jayan sir, Jayan Chatterjee to on what he think about in his perspective.
See, I think, we should not be in a denial mode. Okay. So it has come. Actually, we by default, we know that we are using AI. And everybody uses, YouTube here. Okay. YouTube will prompt you. It is AI driven. So, Google also, when you search anything, it will come, it will prop up. So AI is already there. And, if you see, people who are like of our age, like in the 80s, there was so much opposition and cry, that the bank employees, if computer comes in, you will lose job, So, but nothing has happened, right? And even today, with the digital, accounting and all those digital payment, some vendors will say that, I am not getting the print of the bank statement. It's not required. You have to be smart. What is required is we have to be smart. So I see everybody using a smartphone today. So from a land phone, some 20 years back, when we came for mobile, a normal mobile, now everybody is having a smartphone. Even the people who is walking on the street, they're using smartphone. So they have become smarter. So if we still say that the past was only always good, future is bad, is not right. We have to go with the past. And the good part is that I think with Google and other things, education or the knowledge has become very simple. So we are learning it is more of like user friendly. Nobody has learned, now Excel or, any other, how to see a YouTube video, or everybody has learned it, There is always some small tip somebody will give you and you will be there. So I don't feel it is there. And more, in companies like ours, we feel that we were more of a mechanical and electrical company. So there is so much AI into it. We have people, we are recruiting only AI and knowledge people to bring in the computer, the motors, the robotics are always there. So motors and the other drives are AI driven now. So people want that, I sit in a place and can monitor. So how do I monitor? You have to have a software, you have to have a, the network connection, and you have to have a prompt up, which is AI driven. So I think we should not be panic. And I think, even I see that with the AI teachers, they say it is a hype that has been created. So like, we don't have any taxi driver without using a Google map, right? So Google map will not always give you the right road, it will give a shortcuts. So you have to decide which road to take, whether the shortcut or the long cut is a better road. So we have to use our intelligence, but this is prompting up. So we can do things much better or focus on some other things rather than doing the routine work. And that's all. Thank you.
Yeah, I think recently, in few months back, you may be heard in the news paper, the person went going through that Google map. The bridge was crashed. He was not aware, and the whole family was died. Then they have now put a case on Google. That was a AI and manual. And sir, next to the main lead question to Jayant Chatterjee, with Trump at the helm in US, do you see impact on Make in India initiative? With their focus to move manufacturing to US, and what would companies such as Apple do?
I think, AI might have helped, Nirmala Sitharaman ma'am to make the budget in a way which is focused on manufacturing and MSME. Okay. And, I put a few points, MSME, they contributes 45% of our total export, which I was not aware. And so if we are focusing more on the investment into this industry, this segment, and give benefit in the turnover. So if 500 crore is the limit, I think 70 or 80% of the industry will fall under that. So the thrust is on more on how to do it. And also to add to it, the problem in India, what we have is we don't have R&D. I think, I don't see much in the budget, but I think they have putting on the R&D on this Atal tinkering, centers, I think some 50,000 they are opening it. They are opening from at the school levels. And that is the focus, that if you can bring it up at a level that it can be converted into products or services and we can sell it, I think we can achieve it. Export promotion mission is also built up to help the MSMEs. So I think what Trump is trying to say, he's good, make America great again. And I think I saw today in the paper that make India great. Okay. So it might be a political statement, it might be a little aggressive to say, but I think we have an area which you can capture it. We need not be against Trump or anybody, because Trump has a point of, Harley Davidson to be made available in India with the facilities. So with our road condition, I don't know how much Harley Davidson can be run here, but I think manufacturing industry 4.0 is where we are looking at. So this budget had been made all the things that is enabling, as I told earlier, that, it is our time now to take advantage of it. If we as individuals, as a company, as an entrepreneur, take this opportunity, I think government is trying to support this, manufacturing in the domestic market so that we can do export a lot from here. And with the infrastructure built and the airports, I think now I see the, people's traveling If you go to the airport, you will see more like a bus stand terminal, like an airport, because anybody is traveling on an airline from Bangalore to any part of India. And also we are getting good connectivity across, other countries also. So we can make it.
Yeah, Sunil, then the same question on your perspective, I need an answer.
Yeah. So I think if you look at it globally, other than the geopolitical issues that are happening, there is a lot of polarization that has already happened, or nationalism, if you want to call it. Whether you look at Europe, you look at America. We also, for a long time, have said we need to look at our domestic market. How do we ensure that we produce, for our domestic market? If you look at the last couple of days, which, Trump has now increased the tariffs, I think we are fortunate at this point in time that the tariffs have been imposed only on Mexico, Canada, and China. The way we should see is, what do we do ourselves to get better at? I think that's very important. If you have a great product which has quality, which is built efficiently, you will be able to access, markets. I think from an Indian perspective, couple of things need to be done. One is obviously what my colleague mentioned on R&D. We do need to spend and invest more on that. The second, a lot needs to be done on the ease of doing business. I hear the discussions that I generally have with some of my other, colleagues, both in my industry and also with other MSMEs. A significant amount of time and effort is spent on, compliances, whether it is, tax or non-tax related issues which are there. Clearances still take a lot of time. Approvals take a significant amount of time. We talk about, a single window, but, once you get in, you find there are multiple windows behind that single window which is there, right? So I think those are the elements that we need to kind of focus on, get better in terms of building, global, products, which is globally acceptable. And we are on the way. I'm not saying we are not. I think we've come a long way. Those are the things that we need to do. And then there is a global market outside of the US as well. Sometimes we get too focused on America. There are markets outside in Europe. There are markets in Asia as well that we can access. And I think finally, like I said, if you have a good product, I think there will be consumers that will be there across the globe who will, take it. Cost is eventually an issue, and I'm sure, between the countries, there will be some, level playing field that will eventually set it. That's the way to look at it as we move forward under the Trump regime.
Thank you, Sunil. Before opening for the questions, I request I.S. Prasad, our past president and advisor of Central Tax Committee, to, I think, with no answer, sir, only normal questions.
Good evening. I don't want to take much time. I think all the panelists talks about US, China and everything. I think Rudramurthy sir are very clear that US been almost going to celebrate 250 years. India is celebrating 75th year. Compete China, even now as star content, see the manufacturing cost. Why can't we panelists or intellectual or professionals visit China and how the manufacturing becomes cheaper and globally they can compete? Instead we talk about that China, let us not compare. Being global player, being consumption, like suppose you see all the income tax limits are 12 lakhs exemption, correct? But see the complete GST at 18%. We talk about 7.5 crores taxpayers. How about GST being implication of 140 crores? So every individual knows that just government is not giving us sops. See the 7 lakh crores, now it's been touching 21 lakh crores GST. That means 14 lakh crores been increased over the period. And look at 12 lakhs income of 7 lakh payers is 94 lakh crores. That means on 18% for every time. It's not about I want tax saving. What is my cost of living in India last time and how much I could save investment? Because if you see the budget, they removed all the exemptions, no savings, no planning for investments. You spend. That who will take care of? the common citizens at that point. First question. Second important is that we are moving a global economy. I'm sure that the import duties have been given a lot of concessions. But if you see 36 items which have been exempted from agriculture cess, see the tariff, all agriculture cess on 36 items have been brought back. One side you say that I'm going to remove the tariff, the fine prints, if you say that all the agricultural taxes will come. Overall, I think the budget is very best in last 75 years. We should not compare with China, but we should compete with globally only if the government brings down the cost of manufacturing. Like China has got one taluk, one district, one product. In India, we don't have even one district, one product. My thing is, instead of pricing, we have been part of the journey of nation. We are going to achieve 5 trillion economy. Thanks to Prime Minister of India, we've been very visionary. On the research and development, for only consumption, I think Sailesh can talk about, or Naveen can, or Jayant. Where are we lacking? We can't spend money for the research and development. Has there any provision or any focus that the government of India has been talking about research and development? Sir, I think panelists should give the suggestion to our President of India because he has told me. Second thing is, best thing is MSME talks about. Increasingly, you say that 250 to 500 crores. So increase the bandwidth, making the really micro and small very tough. I want this panelist to give post-budget memorandum. We welcome this budget because the more we get money, I'm only afraid as a professional that you spend everything for expenditure. If you don't save, we don't have social security. I think they should also be brought social security of the taxes paid. With this, I think I don't want to make any statement. The panelists are excellent. You can talk about the infrastructure, 11 lakh crores, what has been positive. You can talk about AI and compliances. I think Naveen sir, future of profession. Because the data what has been uploading in the system, 90% of uneducated. So we all have to give suggestion how to make our ease of doing business, filing return also. I'm very happy that Deepak Kumar Jain has taken time, Jayant and Ravindra Kore has been moderating. Look, we have to be part of system. We have to work 18 hours a day if we want to compete China. So that is one message which has a President. Please let us work and let us work for the country with the hopes that smile while you file the return and get refund. Thank you.
Thank you, sir. Now floor is open for question and answers. So I request audience to raise the questions for any panelist.
A very big team of professionals here. Everyone says the budget is good, budget is good. Only when the reason is they have exempted up to 12 lakhs, I think. But as a perfect businessman, I say budget is not satisfied for us. They have not talked about ease of doing business. They have not cut down the tax terrorism. They have not done any liberalization in licensing. I will just give one example and stop my speech. I earned 1 lakh last year, 1 crore profit in the last year. Immediately I paid 30 lakhs to Nirmala Sitharaman. Then I had 70 lakhs in my hand. My wife told to purchase a vehicle. I paid 28% GST plus 20% cess. Then, at least in this budget, I thought diesel and petrol will become under GST. I went to Medicare. For that also, I paid 45% tax in my fuel. Before going to Medicare, I had to register my vehicle at RTO told you pay 18% road tax. Once again. Then I stayed in my hotel. There, they said you paid 18% GST for the room. Then I went for pub there. There once again I took a 45% excess. Then I sit my home in my room and order my food through Zomato. There once again for delivery charge they charge 18%. For everything, each and everything. Even if I go to a spa, I have to pay 18% that day. The only one item which where I did not pay GST is while going to the washroom, he collected 10 rupees. That is the only way I did not pay GST. These professionals, you have to represent in your future things. That's my request on behalf of all the businessmen. Thank you.
Thank you, sir. Thank you. Any questions, please?
Sir, can I answer for him?
No, that will be part of, because we are professionals who are analyzing what is presented by Nirmala Sitharaman.
But your
We are
wife
not-
should, his wife should be very
Quickly,
happy
not-
because you went for pub and you also went for spa. For that entertainment, you have paid all this tax.
Thank you. So any questions, please? Yeah, give to Mahesh.
My question is to Naveen. Naveen, if you see that for the TPO, that they made one announcement about the block assessment for 3 years. Is it a new kind of tax terrorism? Say that already many cases lying, okay, on the transfer pricing issue before the various forums, okay. Still they're bringing new one more thing saying that we're gonna, no miss a shortcut route, but is that going to be a shortcut or again long cut?
No. In fact, it is a benefit actually. What they are telling, I am going to bring in a block assessment. Suppose you are going to calculate arm's length price in this year and you are ready to accept. Then next 2 years also they are telling, I'll do the assessment based on the same arm's length price.
So
So it is kind of they are giving certainty to the assessment basically.
So if I can take that, just some additional input that we got during the day to understand, where this is coming from. See, if you look at internationally, that's where, everyone said, if you look at outside of India, the transfer pricing is done as a block. You take 3 years or 5 years. The difference or the challenge that the government has is that outside of India, again, your regular assessment that happens is not done on an annual basis. So internationally, when assessments are done, they take again a block of 3 years or a block of 5 years. For example, if they take up an assessment and they take 3 years, and the assessment, takes longer in terms of an additional, 1 year, then they add 1 more year. So by the time you finish your regular assessment, they do it as a block. That is why in outside of India, even transfer pricing, you can do it as a block because it's connected with your normal assessment. But in the case that we have in India, when you do your 143.3, which is the main when the assessment is done, leave aside the 143.1, that is still done as every year is assessed. So unless you switch the regular assessment into also a block, then the transfer pricing can get included as part of that. You don't get a transfer pricing assessment. There's a transfer pricing order which you get, which gets considered by the assessing officer when he passes the final assessment order. So the way the government is looking right now, and they've said that they will consider this, and this is something that they're experimenting and see how it will evolve. Like Naveen mentioned, they're going to take the first year, and if the conclusion is agreeable into your regular assessment, then assuming that the transactions are the same, then they will automatically include it in the next 2 years. They will not again pick you up for the next 2 years again as a transfer pricing assessment. So that is the way they're trying to move because it needs to be incorporated into a regular 143. So I think that's where they are right now. They want to see how it kind of works. It possibly will give the data that we got was out of the 100%, 50% of the cases is the same, transactions which happen year on year, which is there. And possibly about 30% of the other cases, you'll have possibly one new transaction or the other. So they think that about 80% of the matters, if you do it for 1 year, you automatically, if the taxpayer is doing in the same manner, he is consistent, then the same thing will be applied for the next 2 years without having to go through the normal submission. He asks you for the information, you provide the details, and you get the same order out. So that's where they're kind of looking at it because it's connected to your 143, which is where, it all gets tied down to.
Any questions from audience? Right, last.
Hello, sir. My question is regarding TDS on rent. So for now, they have revised the compliance to 50,000 per month instead of the 2,40,000 limit. So my query is that once in 1 month, if I cross the threshold of TDS, then will for the rest of the year also the compliance be applicable, or it's on a month-on-month basis?
Is 50,000 per month or part of a month? It is not 6 lakhs per annum.
Yes, sir. But then could you look at it as each month as an individual transaction?
Yeah,
or-
exactly. You'll have to look at like this.
Okay.
Thank you.
Yeah. Here. Perumal, sir.
Yeah, I am Perumal from FKCCI. Almost in the country, everybody is praising the budget. This budget is for the 8.65 crore taxpayers budget. Nothing has been told about the employment. Employment is the income from the employment is the key factor for the sustainable growth of any country. Last so many years, nothing about employment has been spoken, and no industry has come up last 11 years. In spite of that, somebody is doing business, and the government is taking credit out of it. See, budget is not a mere paper. It has got obligations. It is under Article 112 of the Constitution. The Constitution says the budget is supposed to be job creations, poverty removal, price reduction, tax reform. That is there, 12 lakhs rupees limit. That's one thing is there in this budget. Plus resource allocation. None of the things are not available, which is spelled out in the Constitution. You all praise the budget. Please let me know your comment.
So let me possibly take that, and then a couple of other panelists can also give their view. You're right. In terms of employment generation, I think this was in some ways addressed in the last budget. If you look at it, they came up with the PM internship program of having 1 crore internship over a 5-year period. It has got a start, if I can say, where they've identified 500 large companies to take up, this internship program, which will possibly make these people get into a full-time employment, which is there. So I think possibly they've looked at last year as the initiation of the long-term employment, issue that the country needs to deal with. Going back to the other things that you're talking about in terms of, helping, the poor, in terms of helping a sustainable growth, creating more employment, they have switched, in my view, from, like I said earlier, from an infra or a capex spend to go towards a consumption. The government has done a lot in terms of spending on infra. They have given the tax reduction for corporates when they brought it down a few years back. They have not seen an investment being made by the private sector. The expectation, in my view, is that the money that will now be available to a large section of the society will spur the demand side of it. And expectation is that this will then create more investments to happen, and along with that will come back to the employment. We'll have to wait and watch and see how this unfolds. But I think we need to look at it in a way that they're not doing the same thing over and over and again. They've looked at it something very differently and see what may now work, which has not worked in the past. That's possibly the way I would, see the way the budget has been crafted, looking at the growth on a more sustainable basis as we move forward.
Okay, there is a much not questions. Any questions? No. So I have one question for each panelist, and we can then move on to the next. My question to Rudramurthy. Fiscal deficit is budgeted to 4.4% for next year. Is this realistic despite relief provided to middle class in corporate tax and resulting lower collections in the direct taxes? Where is the gap being funded? I need your quick answer.
Yeah. See, this was a great question. Even in social media, people are talking about it. If they're giving this 1 lakh crore through the direct tax benefits to common men or the taxpayers, how are they bringing this money from or from where? In fact, when I go inside the fine print, they're actually expecting this income tax collections, especially direct tax and in specific income tax, to go up by 16%. From this budget, the expectation to the coming year, that is for 25-26, is increase in income tax collection. And people were wondering, how can you get the higher income tax collection? And if I'm not wrong, that number is somewhere at around 16% increase. Then people were thinking how it is possible. One, can there be capital gains? Again, if you see how market has done in 2024-25, the question of capital gain may not be much. Then from where the money is coming? And when I go inside and then try to see what the numbers are talking about, one, I feel even about 1 lakh people moving into that bracket can be more and large in the coming days. Two, people who are already there in higher income tax group, the 24 lakh plus, those people might earn more income than what they were doing before. And I say numbers from this government, more or less for last so many budgets, if you see, they are reliable and they are something which I can believe upon. They are not like numbers thrown on air. But then, yes, is it possible to have this 16% increase in income tax from the last year to this year on top of giving this 12 lakh rupee benefit? Answer is yes. And where do I see that? I've just mentioned some of these points.
Yeah. Now, anyway, government has said already, madam, 1 lakh crores revenue is going out because of this 12 lakh exemption. Now to Deepak, what is the reason for widening of gap between direct taxes and indirect taxes? In financial year 2021, the gap was 4%, and in 25-26, it is estimated to be 18% in favor of direct tax.
Yeah, maybe I'll just touch upon Perumal sir's and then probably also answer this, sir. So I think in terms of the budget, sir, what he raised is certainly in terms of expectations. Each of us have expectations, right? And if I have a higher expectation and probably from a budget, probably don't get that. That is where I feel the budget is not good. If I don't have expectations at all, and if something kind of comes in, probably I feel the budget is good. Now, looking at the government's No, I'm just coming to that, sir.
Yes.
So we're looking at this government, right? I think each government has its own game plan. Now, this government, what they do is, I think let's not have budget as the base for me to kind of do certain actions. They've kind of created probably, you see how exports have kind of gone in, how imports have kind of got reduced, how bankings have kind of become better, how oil companies have kind of got into profitability, how NPS have kind of come down, how individual income has kind of increased, how from a threshold perspective, number of people liable to GST has kind of increased. So there are multiple yardsticks under which, if you were to see, I mean, if you were to kind of compare, when US, Europe and other developed countries are not performing, and as Rudra also kind of brought out, how India in terms of numbers are kind of doing. So there are multiple yardsticks. So if I can just close my eyes and kind of say, yes, I think from maybe it's a matter of trust, whether it is BJP, whether it's Congress, what is important is to have the right person at the helm. If you don't do that, that is where probably, because we are kind of staking it, right? As sir also kind of brought out. I mean, if you were to kind of compare the effective income tax to an individual and effective indirect tax to an individual, India with the kind of population we have is still lower than the rest that way. So certainly I think the kind of consumption which is there, right, the kind of spend which is required, government needs that money. And to answer in terms of, sir, the direct tax and indirect tax, I think if we were to see the capital expenditure or the revenue expenditure, the only way to, if I have to kind of get India, as Jayanta also brought out, it is not, I can't replace China. It is China plus one. China is bound to be there. So if China is there and I have to kind of come to a stage, I'm far behind. If I have to kind of come, I have to improve my air connectivity, rail connectivity, road infrastructure. There are multiple things. And from a direct or indirect tax perspective, the digital in the short which I did, you see how digitization has gone. India is copying, I think world is copying India, right? So how digitization has probably kind of done it. As Sunil also did mention, AI, the kind of investment which government of India is doing in AI, right? I mean, you have companies like NVIDIA. I think we had a representative from NVIDIA here. So companies who are in the forefront as regards the globe is also looking at India as a dominant factor for that. Blockchain from a technology. No country has a currency based on blockchain as India has. Right, so from a test factor, it has been there in terms of test for some time. I'm sure in the days to come, if we were to assume and kind of imbibe the technology or probably start participating in them, I'm sure the journey is there. And from a growth perspective, direct taxes, I think any what I understand is any fair in terms of economy should have balance of both. That is, direct tax and indirect tax should be reasonably equal, with direct tax being a little more. The gap in around 2021-22 had a gap between direct and indirect to be 4. I mean, about 52 kind of coming in from direct tax and 48 kind of coming in from indirect tax. This budget is widening that gap. So maybe I'm sure the economist will have to kind of do in, but I see that the trend maybe with the ED also working parallel. I'm not sure whether the fear is making people to kind of move from an undeclared economy to declared, whether digitization is kind of bringing in, need to kind of bring in that way. Now, I'm sure with 4 lakhs becoming 12 lakhs, I'm sure you will see many of them, just because it was 4, they were declaring 4. Now it is 12, they start declaring 12. So with a family of whatever we have, I think that income kind of comes to economy and that will get spent, right? And I'm sure that is what we will kind of come.
Thank you. Our speaker,
Mr.
Sunil, also
Deepak.
want to leave at 7:30. We need to close. 1 second. 1 second, sir. So, sir, Jayant, sir, quickly, on post-COVID government spend on capital expenditure has been some decline as a percentage of GDP. Is government intentionally spending less, or was the spend more during the COVID? I need your quick.
I think, in the budget, they have spoken more about public-private partnership. So I think, government, it makes two things. My reading that public also government is also investing and the private players also doing. And also with the state. I think many of the projects were that state center partnership. And I find that it might be a time, maybe a particular year we are seeing that the investment is less, but it will pick it up. And the good this time, they did not give any budget, based on segment, sector-wise, like railway, so much and others. I think, Mr. Perumal, my personal view, that I think the government has made a foundation now. And job has to be created. Otherwise, people, the young youth getting the education, the amount of colleges and the, universities we have, the number of students, even, Trump may say, but, H1 visa, they have to give it because there is a dearth of engineers. Around 70% of the engineers come from outside the country. So India and China fill it up. So we get job there and we will get job here. And MSME, I will again say that because we are increasing to 500 crore, I think we'll have good business, at the MSME level, and we will create more job. Maybe just we see 1 or 2 years time, it doesn't go so fast, but I think after that we will see it.
Okay, thank you. And the last question to Sunil. Sunil, there was a lot of expectations from the budget to revive the incentives to SEZ and EOUs. Budget after budget, there is a lack of attention and the leading to units moving out of scheme. Are there any measures expected? The budget did mention about export promotion mission. How do you see that fueling the exports?
The government has already announced its intention on these incentives, which are there couple of years back, that they will get, sunset, and no sector should expect any kind of incentives for a couple of reasons. One, going back to the overall approach to simplify, the tax codes which are there, and also to reduce the litigations. So this issue was again discussed earlier in the day today, and I think the government official was very clear, don't expect any more incentives to be given. So if there is any expectation of SEZs to continue or EOUs which used to be there earlier, I don't think that's going to be there. They are not in a mood of giving any incentives or even extending any of that. People will need to take a call in terms of whether these SCZs are helpful, because there are a lot of compliance issues, that you need to deal with. Possibly some are still working with the SCZs because as far as indirect tax is concerned, you get input exemption. You don't have to, pay and then claim refund. But there are a lot of other compliances that you need to deal with. So I think industry needs to take a call on, what works or doesn't work from an SCZ perspective. But getting incentives, I don't think, expectation, I don't think any of us should have.
Thank you. That's from my side. I request CA Sailesh Astva, Partner Accolet Advisor Private Limited, to render the vote of thanks. As a moderator, my special thanks to CA Sunil Dhareshwar, and from Infosys, CA Sunil Dhareshwar from Infosys, and CA Jayant Chatterjee from ABB. Special thanks to both of them, and my professional colleagues, CA Rudramurthy, CA Navin Kariwal, and host of this program and partner, CA Deepak Kumar Jain. Now I request Shailesh to.
Deepak, I
No, no.
like to indirect tax question. See, are paying 18% and the end tax. There are any chances this, government will look at it?
I'll pick that up again. So, quick input.
My elder brother is there.
So, I think. So, again, the intent from the government is to look at this issue in terms of, making some relief as far as the insurance, premiums are concerned. The challenge that we understand is the fact that while it is good from the cost perspective, which is there are challenges around, the insurance sector, which is concerned, because the issue will now switch from the healthcare side, which is, hospitals and pharmaceuticals and all of that, to the insurance industry. Because if you make insurance premium, you go down to not having GST or exempt, then they will have a challenge in terms of their input GST, which is there. So I think it's a little more, complex in the way the government wants to look at it. There are multiple stakeholders which are there. The intent is to see how, that can be, rationalized, but at the same time, looking at multiple stakeholders. So I think that's the reason why it's taking a little longer in terms of getting a solution to that, what we are all looking forward to.
Hi, good evening, everyone. It's a privilege to stand before you all and give my sincere gratitude to all the members present here. And it's an honor to be part of this wonderful event. In this short span of 2 hours, we traveled from beta to data, and from data to AI, from AI to China +1, and then to MSME. So in this short span of time, thanks to this distinguished speakers like CA Rudramurthy sir, CA Navin Khariwal sir, Deepak sir, and Jayanta sir, and Sunil Dhareshwar sir, because of the good experience of 200+ years, we were able to hear in such a short span of time how to disseminate our GDP, how to disseminate our transfer pricing parts. Thank you so much for all the suggestions and your thoughtful views given. And thankful to Sri Ravindra Kore, Chairman, FKCCI, for giving his time, support, constant encouragement to team here and to everyone and to FKCCI team, how to give a best budget in this 1 day time. It was presented on Saturday and Sunday being a non-working day, and Monday evening we all are here. And thank you so much to all the members present here and all the audience joining from virtual. Thank you so much for your time and patience listening from all of them. Thank you so much. And at the last, I like to say one thing. We make a living by what we get, but we make a life by what we give. So thank you so much to all the dignitaries for giving the insightful thoughts and making us a good analysis on the budget. Yeah. Thank you so much.